In this video, we will be reviewing the Gyroscopes mt5 Expert Advisor by Ms. Nadira Milosh. Stick around to the end to see if this is a real EA, worth your time, or just another MQL5 scam. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. This bot originally caught my attention as it's meant to be based on Elliott wave theory, and which is quite neat, as Elliott wave is one of the hardest things to actually code because it's very subjective. And I know that many developers have tried coding Elliott wave theory in the past, but it's pretty tough because you have to, there's a degree of discretion in counting what is a wave. So you can make some algorithms around it based on pivot points, etc., but I've yet to see it successfully implemented in a bot, at least to what I've seen so far. So quite neat to see that somebody's trying to do that if they are actually doing it. So here they're giving a bit of a brief overview of what is Elliott wave theory. So the 5-wave pattern has 3 consistent properties, and effectively you're looking for certain impulse waves and then pullbacks. And it's all based on a sequence, and that the market essentially moves in the sequence of 5 waves. I find Elliott is one of the more challenging things to actually trade in a systematic way with. And an interesting anecdote, people often compare Elliott wave theory to Wyckoff theory. And kind of an interesting point is I think Elliott died broke, whereas Wyckoff was one of the richest men in the United States. So they're both a little bit different techniques, but people would insinuate that Wyckoff is far more accurate than Elliott, just because the subjectivity made it not incredibly lucrative. But some people swear by it, so to each their own. Anyway, we can keep going through the different parameters here. And if you look at some of the pairs that it trades the Euro US dollar, GBP, USD yen, Aussie dollar, and USD Swiss franc. So large preference for the US dollar pairs. And they do prefer going for lower spreads. It also requires a significant deposit of $10,000. And from what I can see so far is that it is clearly a grid martingale system, or it looks rather grid martingale-esque. And let's see if they ask for a minimum amount of leverage. Not seeing anything there. And there's also no live signal. So let me quickly pop open mt5, where I've taken the liberty of downloading the bot and running a quick backtest. What we can see here is that it's very obviously a grid martingale, right? We have pretty good returns here, but this is largely because we did not blow up, right? So martingales work great until they don't. And here we are seeing, it's almost like a staircase up. So they must be scaling lot size in a more rapid way so that when a grid closes, it doesn't close in a break even, but instead it closes in profit, and that's why you see these jumps in the equity curve. So the jumps are usually indicative of a higher risk martingale because their lot scaling factor is quite a bit higher. So here we're seeing as well that the short trades are making both short and long trades roughly equivalent, with a high 86 or 87% win rate and even a fairly positive risk reward. This, though, is not super surprising in the event of a martingale. I also wouldn't be surprised if there is a degree of over-optimization. We can also look here, money management on. That means that there is clearly a martingale. It's starting off at a super low lot size, and I believe that's why they're able to scale pretty quickly. I'm curious now to see if it's trading only one pair or if it's trading multiple simultaneously. Oh, okay. It's actually running very quickly, which is a great sign. So yeah, a classic grid-based system, right? It has multiple different orders pending. I'm curious to see, oh no, those are not pending orders, they're market orders. Yeah, it's just constantly opening more and more positions. And it is scaling the lot size too. So it's not a exact doubling, but it is definitely scaling lot size. And this is a very classic grid type pattern. Let's see if, oh yeah, we're always just making profits. But the interesting thing here, I believe it's only trading the Euro US dollar. Yes. And I'm curious as to what the exact entry is, Let me fast forward it so maybe we can get a bit of a better idea of how it's deciding to make trading decisions. Wow, these are a lot of trades. So in my opinion, this appears to be more of a mean reverting premise. So when price pushes away from moving average or from a center, it's then shorting. There isn't a ton of indicators here either. Everything appears to just be running on raw price action, so it could also be hard-coded. I wouldn't be surprised if there's some sort of more hard-coded bot here. And it seems to almost always be oscillating between long and short positions. It's not hedging. So it enters here with a bunch of longs, it closes, then immediately it opens. So it's almost following a stop and reverse premise, except with grids. And here we can see grids, and then stops, and then opens a new one. So it is following a mean reversion type entry signal. Likely there's a hard-coded Bollinger Band or some sort of like oscillating indicator behind it. It's using a classic grid Martingale system where it's scaling as price goes away from it. And it really, like, it is a real strategy. It is not super slow, but this type of system almost always blows up. Particularly, there's nothing super unique or special about this one. At the same time, like, she's charging $1,000 for this. This is an extremely basic system. It's just like enter on a mean reverting indicator, and then as price pushes away, open additional positions. So it's really not rocket science. It's not a particularly creative or super revolutionary strategy. I would say it's very overpriced. You can probably get a similar strategy to this for a fraction of the cost because pretty much everybody knows how to do this by now. It's not a super sophisticated technique. There might also be a degree of over-optimization here, just because the fact that she's able to run relatively high risk without having super large detachments from the equity from the balance line. So that's something which I would be a little bit hesitant about. Not only is this bot using a very risky strategy of like a fairly unsophisticated grid martingale, we're also seeing an overly good looking equity curve, and that means that there might be some degree of cherry picking or over-optimization here. So my general view is that it's not a terrible bot, but it's overpriced. If you want to use this kind of strategy, be extremely careful. Use it on prop accounts where your risk is hedged. And yeah, I wouldn't recommend this particular one, but it's not a scam. It's just a expensive, risky system. Take care, guys. Have yourselves a great day.